Hello everyone, this is Juan Sarmiento and today is Friday, November the 11th. And this is the second video of the day. And now I'm going to go through my potential candidates. Once we have created, please watch the previous video, we have created this script so that I can display the percent change of any stock in any of these lists over the last 10 days, all right? And so I have created this list as we went along in previous days. Whenever I wasn't sure I could enter the trade, I left it in this candidates list. Let's arrange this a little bit, but this, what it means is that I can organize them, organize this list of previous candidates based on the percent change over the last 10 days. So I'm going to click here and I'm going to disregard those that are now negative, such as Apple. Let's click Apple here. Obviously it went down. Obviously I have picked it up as a post-earnings candidate. Here it is, but it collapsed after earnings, and now it's picking up again. All right, I'm going to leave it for future, but right now being negative, I'm not interested. Same with Amazon, dropped, and now it's coming up again, nicely actually. But I'm going to step aside for now. They have earnings report that came ahead of expectations, and same as Apple also, ahead of expectations. And an original bump came down with the rest of the market. Oracle, positive as well. And let's see. The earnings was here, they came, ahead of expectations. The stock dropped anyway, so that's not what I would pick up, but now look at that, very nicely. However, look at my IVSV chart that I created. It needs to be green and needs to be at the bottom of the chart. Why would it be green? Well, that's a comparison between the implied volatility and the statistical volatility or historical volatility. If the implied volatility is too high compared to the historical volatility, then that's not a candidate for us. Okay, so if this is yellow, forget it. We need to see it down here and green. Okay, let's move on to Costco. Again, the percent change has decreased. Stock is moving up though, and green here gives me the green light, but I would like to see it lower. That means it's intermediate here. What does that mean? Well, you can go to the trade tab and scroll down to where it says current IV percentile, that's 38%. That's too high. We wanted something like 15, right? So let's move on to the next candidate, the LTR. Let's look at the chart. No, too much volatility and the earnings are coming up. So you see how the volatility increases in advance of the earnings and the line is red, so it says don't even touch it. Amgen, the stock has jumped very much. Earnings was fantastic. They have had great news coming up and the volatility is still a little high and it's yellow, so forget it. Not a good candidate. Akamai, same thing, is still red. Okay, so no, not my candidate. CSX, oh, that's a good one because the volatility is down here. It's been picking up though, and they beat expectations by a tiny margin, not a whole lot. Okay, so this will be the candidate on this list. So I'm going to write it down and we're going to cover it a little later on. I want to cover all of them here. DHR, great move. Look at that. And the IV percentile is low. Okay, so that's definitely a candidate. DHR, a candidate, and you can see the earnings report came here. And that was well ahead of expectations. So that's a good candidate. So I have two CSX and DHR. Okay, these are previous candidates. Now I can look at another list from previous, that was candidates. Let's candidates one. Okay, obviously in a past week we did this. Goldman Sachs, in fact, I think I have Goldman Sachs in my list. Yes, it's already traded, so I'm not gonna trade it again. Gilead, We have a trade on it. Good. T-Mobile, we had a trade but potential, but we decided not to, and I can see that the volatility here is very low in the front month and higher in the start, so that's not a good trade. And this potential trade, you can see that it's done nothing. So since I put it here to last week or the week before, I don't remember. And LMT, okay, this one hasn't done much for us. Let's take a look at the chart quickly. Okay, you see how it's coming down and the volatility is green here, so you could potentially enter a trade now, but we already have one, so let's move on to the next list. And this list I picked today. Look at all the percent changes are very high, except, so let's start from win and make sure you look at those IV charts. Red charts, forget it, don't even try it, not even try for Nvidia. Starbucks. Oh, this one is looking good. The volatility has dropped to near the base. The base is 30 and is currently 34. So earnings ahead of expectations. So I'm going to write it down and we'll discuss it in just a bit, okay? I'm going to go through this list quickly. Lululemon, oh, SPC, okay, that's good one too. Let's see what the earnings were. That came short of expectations. I'm not gonna, you can investigate, but I'm not too keen on it, so let's just move on. Lulu, again, volatility is too high, so ignore that. Len, high volatility. AVGO is coming down, but it's still red. Intel, no. Okay, so we have 3 candidates today. Let's start with CSX. All right, so we need to know, did they beat by a wide margin? Okay, so earnings here, and it came at 52 versus 49. That's a narrow. So the first item in my list, earnings for CSX is, I would say, B minus. Okay, not good, not excellent is what I mean. But it has gone up more than 10%, so you could look at it. Let's create a new list, okay? Create a watch list, call it candidates 3, and put our 3 so that what we don't do today, we could do some other time. Okay, so I'm going to have CSX. We have also DHR. And finally, SPUX. Great. Oh yeah, so you can see how much they have changed. No, that's not it. That's something else. Here you can see how much they've changed. Great. So CSX has changed less than 10%, but still looks great. So let's analyze this. First, go to the trade tab. What is the IV percentile? 43. That's just too high. So that's strike 2 against. The earnings wasn't good. And the IV percentile also not good. Okay, still, let's see if we can be a little stubborn. I'm going to create the trade here. Go to the Analyze tab if you wish. And I'm going to create for you the template for the Gini trade. Start off by looking at the month you're going to trade. It needs to be, the number of days needs to be less than, no more than 90. Okay, so 98 sounds good. Look for the strike price 30. Let's put 30 because it's standard. 30, 35. You could do 32.5. Okay, let's do the 30. Click here, right click on anywhere here and say Analyze By and click on Straddle. All right, that creates a single straddle back month. Press you can change that to 2, okay? You need at least 2, all right? 2 straddles. And then we're gonna sell the front month. Could be 9th of December, that's 28 days, 30, somewhere around 30 will be ideal. And we're gonna do the 30 strike price. This time, press the control key, right click on the ask or anywhere in that line and say sell straddle. And when you sell it, it puts it here as a single straddle, and that has created my trade. Okay. Now you can save this. You say create duplicate, and you can click here on this icon in the lower right corner. It says save custom order template. Name it what you will. I already have one called Genie, and that's the trade you want to reuse in the future. Okay. All right. So that the next time you simply click here, anywhere. Let's say we go to the back month, February, the 30th, and then right click and say buy custom. And needs to be on the trade tab this time, okay? The templates won't work except for the trade tab for some reason. Okay, click there and say buy custom, and you would see Genie or whatever name you gave to your template. I say Genie, and here it is. That's my trade. So then analyze it. And now we have the exact same trade, don't we? Okay, so let's move on. Do I want to trade this? Well, look at the volatility. That's the other aspect here. We can expand this a little bit. Here in the lower right corner, we see 34, 27, 32, 31. So these numbers need to be in balance. So go to your calculator and show your paper in case you, let's clear that. And I'm gonna do 34.6 plus 27.73, divide that by 2, and that's the average of the back month options volatility. Okay, we need that. You can save it and do the same for the front month. December 9th options, 32.05 plus 30.34. It doesn't matter if it changes a bit, okay? It's not going to be a big deal. Just put whatever you can as it moves. And that's 31.195. And that's practically identical to the average of the back month. So that's going to be, you subtract the existing, and that gives you 0.03, which is not 3%, is 0.03%. So 3 is what we need, so that little is no difference. So that's not an impediment. So you can say, okay, as far as the IV skew, let's call it that, because it's the front month versus the back month, it's not a problem. That's a plus on that. Okay? Then you see the other aspect is create duplicate order. And then when you create, you have mid and natural. Okay, use your calculator again and simply subtract 6.3 minus 5.65 times 100. No. Sorry, it's 0.68 divided by 6.3, and that gives you 10%. 10% is just too high, all right? We need this number to be 10%, 3%, not 10%. So that's a big no-no as well. So we are not trading this, it's just not a good trade. All right, let's move on to the next candidate, which is DHR. All right, so we're going to examine the chart first of all, the earnings and so on. chart looks great. The volatility has dropped down. Look at the trade tab and look at the implied volatility on the trade tab. Current IV percentile 38, that's kind of high. We needed to be down here near the bottom of the lower end during the year, but it's green, so that means the IV statistical versus implied is not a big problem. It's not a problem, okay? Then, but we have a strike in relation to the implied volatility is just a little too high. The IV percentile is a little too high. So that usually doesn't stop me, but keep in mind that that's okay. So now we have 2.24 estimate. That's the earnings. Just go down here to the chart and look at that. The estimate versus the actual. If you have a problem showing this up, just talk to the Thinkorswim people and they will tell you how to put that up, okay? And simply put, we have the earnings. They were expecting 2.24 and they got 2.56. So that's a big beat. And I suspect, but the way to calculate is 2.56 minus 2.24 divided by 2.24, and that's 14%. Okay, that means they beat by a wide margin, which is 10 or more is a wide margin. If it is 30, well, absolutely great. Okay, all right. So again, that looks great. When I see good earnings like that in a big move, 10%, and it's very steep move over the last couple of days, you could buy the stock, but you think, oh, you may be thinking it already made its move and that kind of thing. That's not a problem with the Gini trade. Okay, let's go to the Analyze tab and look for that 90-day, let's say March. 90-day or more, 126 days. The strike price is 274, 270. So I'm going to click here and say buy trade. Oh, we need to do it in the trade tab. I forget that. Okay, once again, let's do 270. Buy custom Gini. If you saved it like that or whatever name you gave it. All right, and then analyze that. Is the volatility too high? No, it might be okay, the skew. Okay, let's do the calculator. Again, look here in the bottom right corner, 34.91 plus 28.75. Divide that by 2, and it's 31.83. And at the bottom we have, let's clear that, 33.47 plus 30. Divide that by 2. And yeah, it's practically the same. Look at this number, 31.83, 31.50. You compare them by subtracting and dividing, okay? Subtracting the difference is nil, so that's not going to be 3%. So again, 31.83, the difference is 0.095, and you divide that by the highest number and it's going to be practically nothing. Okay, so we're not worried about the skew. The skew is all right. Okay, earnings great, skew okay, the IV percentile not so good. Okay, what about the liquidity? How do you calculate liquidity? Create the duplicate trade and look at here between the mid and the natural. And again, calculator. We are going to save. Let's clear that up. 62.6. I'm looking at this number here, okay? Natural versus mid. That's the spread of my options. It can't be, if it is too large, we're just giving money away. divided by 62.4, and that's 0.07. Way too much difference. Okay, so I'm not even going to try this. It's just too much. You're giving money away, essentially, and you're hoping that the change will be so big that it will compensate you. Well, I don't think that's a good idea. So, yeah, we just go straight to Starbucks, SPUX. Again, look at the chart first. Moving nicely, 52-week high, volatility is dropping. Right now it's 34. It turned yellow, but it's been green most of the time, so that's okay. Not excited, but that's okay. What about the earnings? Would that make me excited? Perhaps. Let's take the calculator again. And just so you see these steps, you can write them down because you need to go through them. So 81 versus 72, I think. Yeah, 81 versus 72. So 81 minus 72, divide that by, oh, I'm sorry, 0.81 minus 0.72. Let's do things properly. Divide by 0.72 or 0.81. I'm going to say 81. Okay, that's 11%. 11% is good. Good earnings, great. All right, so we have earnings, SPUX, earnings is great. IV percentile, it looks like towards the lower end, but it might be still too high. That's not gonna stop me, but it's 40%. Well, it sort of stops me a little. 40% is not my favorite. I'd like to see this 20, 15 at least is my standard. 20, I would accept it. Okay. Then we see that's the skew. Well, that we need to create the trade. Go to the trade tab and look for the month. Back month will be March. Look at the strike price will be 95. Click here, right click and say buy custom. Select your template. And that should create your trade. If you need to change any item here, like go back in months or go further closer in the front month, you can always change that. This is quite editable. Okay, so 37.30. This is going to be okay, I think. Let's go to the calculator again. Let's do the two numbers on the back month. 37.23 plus 30.2. Divide that by 2, and that's 33. 35.13 plus 30.05. Divide that by 2, and I don't need to tell you that they're really close. And the back month, yeah, well, divide that, subtract the front month. This number is the front month, the back month is here. Let's subtract the back month. Minus 33.715, 1.125. Okay, and then let's divide that by no, that was 1 something. Okay, so that's good enough. Minus 1.125. So that's 1%. That's good enough. Okay, so the skew is just fine. And then we see create the duplicate, and we're looking for the liquidity on it, mid versus natural of this whole trade. Okay. Again, the back month is, the natural is 22.48 and subtract 21.81, difference 0.67. Okay, that's liquid enough. Divide that by 22.49, and that's less than 1%. Okay, I think times 100, yeah, 2.97%. Okay, so we can do this one. All right. So now we look at our cash here. Net liquid value of our trading account is $104,000. 10% of that is $10,394. Okay, so we can create the trade, create duplicate order, confirm and send, and then we say multiple. Why do I do that? So that I have more control over my quantity. For some reason it shows it here very nicely, and I see buying power effect, and I press the plus key. 10,900, okay, and that is a little too much. Yeah, I'm gonna do it anyway. 10,900. If the account was 109,000, that will be 10%. Okay, so I'm gonna adjust that. I'm gonna live with it and send it that way. All right, and then we'll see if it gets filled. Okay, long-winded session, but I think it's very useful to go through this procedure for each trade that you intend to play. We will always look back at these candidates later on in case we change our minds about, or they look better going forward. All right, or you can look at any of your favorite, create a favorite list. Let's say the stocks you've traded in the past, anything, you know, any list, and look at the guys that have more than 10%, and then start looking at their implied volatility. Now that you have this chart, which ones have a green or yellow line, particularly at the very end. You wanted, okay, this one here was Twitter. I think, let me see if it got filled. No, still not. It's going up, so I can adopt cancel replace and just unlock it and accept that order the way it is until it gets filled. You're just trying to see if the price gets ugly, you don't trade it, but if it is okay, you know, just a little bit higher, it should fill shortly. That's it. Okay, so I have shown you how to look at your stocks critically and see whether they're worth doing these trades, and that's how you pick winners. Potential, that is. Okay, so for the year we have come to $12,410 and 50 cents to $450. It's going up as we speak for the year. Okay, we are still have a month and a half to go, and who knows what will happen. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.